slow, professional, thoughtful tone. You know, in the world of fintech, we often talk about growth at all costs. It's the standard playbook. Burn cash, acquire users, worry about profit later. But what happens when a giant decides to stop the engine, strip it down, and rebuild it while moving at full speed? We are looking at a company today that has cut 40% of its workforce. 40%. That is not a trim. That is an amputation.
It is massive. And we are talking about Block Inc., ticker symbol XYZ. It's March 18th, 2026, and this company is arguably the most fascinating case study in the market right now. They are betting the entire house on AI-driven efficiency.
It feels like a high-stakes poker game. On one hand, you have analysts shouting, buy, and on the other hand, you have the big institutions quietly heading for the exit. So, are we looking at a value trap or a coiled spring ready to pop?
That is exactly the question. We are looking at a company in a show-me phase. They've gone from 10,000 employees down to 6 in. The narrative here is that they are pivoting from a bloated growth stock to a lean, mean, cash-generating machine. And if you look at the free cash flow, it's actually working.
Let's dig into that, because when I see a company slashing jobs, I usually think desperation. But you're saying the cash flow tells a different story?
It does. Their free cash flow growth hit 56% in 2025. They have a free cash flow yield of 6.68%. In this market, that is incredibly healthy. They are proving they can generate real cash, not just those adjusted earnings tricks we see so often. They are strictly following the rule of 40, balancing growth and profitability.
Okay, so they are efficient, they are saving money, but you can't save your way to growth forever. What is happening on the top line? Are they actually selling more product?
And that is the catch. That is the ugly side of this report. Revenue growth is stagnant. It came in at 0.3% year over year.
0.3? That is essentially flat.
It's basically a standstill. And for a company that is valued as a tech stock or a growth stock, that is alarming. EPS growth was down over 54% as well. So you have this massive disconnect. The bulls are cheering the efficiency and the cash flow, saying that look how profitable they are becoming. But the bears are looking in at that 0.3% revenue growth and saying the growth engine is broken. This is just a mature financial service company now, not a tech unicorn.
That's a tough spot. If they can't reignite that revenue, that tech premium on their stock price is going to evaporate. It sounds like they are struggling to find new avenues for expansion.
Exactly. The fintech landscape is crowded. You have competitors undercutting fees and Block's gross margins, while decent at around 42% could be at risk if they get into a price war. Plus, they are heavily reliant on consumer spending via Cash App. If the economy slows down, those transaction volumes drop.
So fundamentally, we have a mixed bag. Great cash flow, terrible growth. But let's shift gears to the charts. I'm looking at the price action for March 18th, and it looks precarious. We are sitting around $59.74. What is the technical setup telling us?
It is fragile. To put it bluntly, the technicals are bearish. The stock is trading in what I call no man's land. It is currently below its 50-day simple moving average of $60.91 and significantly below the 200-day average of $60.36.
Being below the 200-day is never a good look for a long-term hold.
No, it signals a dominant bearish trend. We saw a recent pop in the stock price following the Q4 earnings, likely due to that efficiency narrative we discussed. But that pop is being faded. The stock is struggling to hold key levels. Right now, it's consolidating between $59.40 and $61.50.
So, if I'm a trader looking at this today, is there an entry signal?
Near term, no. The signal is a hard wait. The 4-hour RSI is sitting at roughly 44, which shows a total lack of buying conviction. The MACD is bearish. There is just no catalyst right now to push it above that resistance. If you buy here, you are essentially trying to catch a falling knife.
And nobody likes catching knives. You mentioned resistance. What is the magic number? If the bulls are going to take control, where does the price need to go?
61.50. We need to see a clean break above 61.50 with volume. Until then, the sellers are in control. If it breaks below 59.40, we could see a quick slide down to the mid-50s, maybe testing $58 to 66.
That aligns with the broader market context too, doesn't it? The S&P 500 and the VIX aren't exactly giving us a tailwind right now.
Right. The VIX is spiking, showing market fear. When the broad market is in risk-off mode, growth-oriented tech stocks like Block usually get hit harder than the index.
I want to circle back to something you mentioned earlier, the smart money. You said institutions are leaving?
This is the most concerning part of the sentiment analysis. We have seen significant selling from major holders. Prana Capital reduced their position by 89%. First Trust sold off about 26%. BVA is trimming too.
That is a mass exodus. Why are they running if the cash flow is so good?
It's likely the risk profile. Aside from the execution risk of firing 40% of your staff, there is a legal cloud hanging over the company. There are ongoing investigations regarding fiduciary duties.
Ah, the dreaded legal headwinds.
Exactly. It creates headline risk. Even if the company is doing well operationally, a bad legal headline can cause the stock to gap down overnight. Institutions hate uncertainty, so they are de-risking. It's a classic tug of war. Analysts at Truist and Morgan Stanley are upgrading the stock because they love the AI story, but the actual fund managers are selling because they fear the legal and execution risks.
That is a fascinating conflict. The analysts versus the money managers. Who usually wins that fight?
In the short term, usually the money managers. Price follows volume, and if the big funds are selling, it creates a ceiling on the stock price.
It seems like Block is trying to be two things at once, a stable value company and a high-growth AI innovator. And right now, the market doesn't know how to price it.
Precisely. It's an identity crisis. Are they a mature financial firm? Then they are priced correctly. Are they a tech growth stock? Then they are in trouble because they aren't growing revenue.
So, for our listeners on the US Stockpicker podcast, this isn't a set it and forget it situation.
Absolutely not. This is a watch and wait. The risk-reward profile for a swing trade right now is unattractive. You don't get paid for taking this risk until the chart proves the trend is reversed.
It's interesting to think about the human cost here too. That 40% workforce reduction is being celebrated by Wall Street models as efficiency, but it creates internal chaos. Can a company innovate when half the building is empty and the other half is terrified of being next?
That's the execution risk we talked about. If that culture breaks, product quality drops, and that 0.3% revenue growth could turn negative. However, if AI truly fills the gap, they could become the most profitable fintech on the street.
It's a brave new world. Before we wrap up, I want to summarize where we stand. We have a company with great cash flow, terrible revenue growth, bearish technicals, and a split sentiment between analysts and institutions. It feels like we are standing on the edge of a cliff, waiting to see if they build a bridge or fall off.
That's the perfect analogy. The next 2 quarters are critical. We need to see if that revenue growth ticks back up to mid-single digits. If it stays flat, the stock stays flat, or worse.
All right, let's get specific for our listeners. We've broken down the narrative, but let's give them the actionable roadmap. If they are looking at XYZ, what exactly should they be doing?
Here is the bottom line for the US Stockpicker podcast listeners.
Lay it out.
First, new sentiment analysis. It is mixed to positive, structurally, because of the efficiency pivot, but practically, it's negative, due to institutional selling and legal risks. The smart money is leaving, which is a major caution flag.
And the fundamentals?
Fundamental analysis. It's a hold. The valuation is fair at 0.20 SPE, but the lack of revenue growth is a deal breaker for new capital. The company is profitable, but stagnant on the top line.
What about the traders?
Swing trade analysis. Currently, it is no trade. The trend is bearish, trading below the 50-day and 200-day moving averages. Momentum indicators like RSI and MACD are weak.
So when do we actually pull the trigger?
Recommendation of when to start investing. You must wait for the trend to shift. Do not try to front-run the move. You need to see stability and a technical breakout.
Give us the number.
What price point to start investing at? You are looking for a confirmed breakout above $61.50. It needs to close above that level, ideally with volume, to prove the bulls have regained control.
And if it goes the other way? When do we bail?
When to leave the market? If you are already holding, you are in a dangerous spot. But if the support breaks, the thesis is broken.
And the specific exit price?
What price point to leave the market at? The hard line in the sand is $58.50. If it breaks below $58.50, the bearish trend accelerates, and you are looking at a slide to the mid-50s. Protect your capital.
Clear, concise, and actionable. As always, the market tells the story. We just read the tape. Thanks for the deep dive.
Always a pleasure.
Slow professional sign-off. Keep your eyes on the charts, and we'll catch you on the next one.
The information provided here and on this channel is for general informational and for education purposes only. It does not constitute investment advice, financial advice, trading advice, or any other sort of advice. We make no recommendations regarding investment decisions based on this information. You are solely responsible for your investments. Please conduct your own research and consult qualified financial advisors before any investing. Video title: Technology stock. Predictions: Is block XYZ ready to pop? Upside potential, stocks and growth stock. Picks analysis. Stocks, stock trade. Podcast. Insight.